have the economic survey released this afternoon, and I thought I'll have a look at it as a document which provides us insights into economic policy formulation and also informs us about the state of the Indian economy, both from short-term perspective as well as from the long-term perspective. I used to be and continue to be very fond of economic survey document because it's supposed to be a document which gives insights into policy formulation, in a way lays out the vision for what we can see or what we're likely to see in the medium term, and then also what we can expect in the budget. This time, of course, we have much shorter version of the economic survey, and the team has outlined why they prefer this version versus the older version where we had two volumes, one focusing on sectors and one focusing on the economy. We'll discuss that a little later in our conversation. But my belief is that India, we don't look at economic policy making from the long-term perspective. Economic survey was one document which laid out that for us in most years. So it'll be good to have the economic team, Ministry of Finance and its advisors, either maybe prepare during the year a long-term policy document or a vision document for where we see India's economic progress in, let's say, next decade. Most countries do that. We are a large economy which doesn't do that, so therefore it would be nice to see that. Good thing is that economic survey confirms that India's recovery is happening and happening reasonably well. We've recovered from the contraction last year and we're expecting to close the year with 9% plus growth. Next year is also expected to be 8% plus, which is not a bad sign at all. Also, what we see is that consumption and investment both are being driven by government spending, and which is okay because that's what we would have expected the government to do. Though some of us believe that government has not been adequately investing, and I'm also one of them who believes that the government could do more and should do more. Because private sector as well as households have lost their ability to invest even before the pandemic, because as you know, our quarterly growth rate in the pre-pandemic quarter had fallen to 3% and economy was trending at 6% pre-pandemic itself. So it is the government spending which, both in terms of capital as well as consumption, which has driven recovery, and that's good. And the quality of expenditure has also improved over the last couple of years. We know that the capital expenditure by the central government particularly, and both the states also in many cases, has increased. Though I like looking at the absolute numbers, not ratios, because in last year we made an accounting adjustment for food subsidy, so that distorts the revenue expenditure total amount, and therefore makes revenue expenditure look a larger percentage. This year we had budgeted about 5.5 lakh crores of capital expenditure. 9 months we spent 2.75 crores. So this is about half of the budgeted expenditure is what we have spent. So my worry will be, or my question will be, are we going to spend the balance amount in next 4 months, and what kind of projects will this money go into, and what impact therefore will have on the year 22-23. So that's one thing we will look forward to seeing or hearing from our finance minister tomorrow. How are we going to spend that money, and which projects is it likely to go into, which sectors is likely to go into. And on the export side, exports have been buoyant. Imports have also done well in some ways. Though my only question was saying there has been a significant increase in gold imports. Gold imports have gone up from about $12 billion to $33 billion in the first 9 months of the year. So it would. The question we need to ask is what kind of gold imports these are. Are these speculative gold imports for taking advantage of an expected increase in prices, or are these gold imports which will go back as jewelry for exports. So we'll have to see how jewelry exports work through in the next few months or the next year or so. So that's on the economic performance side. And then on the fiscal side, I think our biggest concern will be government revenue to GDP ratio. What we notice in the survey is that tax revenue is expected to be 6.9% of the GDP for the central government, and this year, and it was same last year, and not last year, 2 years ago when the economy was normal. If government has to continue spending and help us recover faster or accelerate growth, we would need to see how finance minister tomorrow raises or discusses our resource mobilization plan, because government's ability to invest or spend is function of the tax revenue it generates. Though we can obviously borrow and print, there is no issue there. At least I am not one of those who believe saying fiscal deficit is a problem. Our fiscal deficit can be higher for some more time. One, pandemic, and two, the kind of economy we are, government needs to be a driver of investments, and therefore we can afford to have fiscal deficit which is higher. So that will be another concern, saying what kind of resource mobilization plan we will see tomorrow in the budget. I think the rest of the survey, the way I saw it was that it's an interesting document this year, because it's beginning to use, or has started using, a lot of high frequency indicators. You will see an annex also which lists down all the high frequency indicators which the survey uses. The question I would ask myself is saying a document like survey and policy making, is it to be done from a short-term perspective or is it to be done from a long-term perspective? My argument always is saying government investments must always be made from long-term perspective. This was a crisis that we were dealing with for 2 years, so God willing, next year we won't see another crisis as a result of COVID. So going forward, I would like to personally see a little more long-term perspective on performance and long-term perspective on investments, because we have to recover the lost incomes for a lot of households. Unemployment had gone up substantially and still continued to be high. Quality of employment has been falling for many years, because a lot of employment has become contract or temporary employment. And a lot of households have also suffered losses in savings because they had to treat their families or themselves for COVID-related costs. So what I would like to see is a long-term perspective in the budget, and also maybe later during the year, saying how are we going to recover from these losses and accelerate growth to at least 7.5-8% in next 2 to 3 years. And I think survey doesn't do justice to that, though it's nice to see geospatial technologies or cartography being used to assess our economic performance. I would leave that to financial markets to do, because they worry about more short-term performance than in the long term. In economics, I would prefer that the government focuses on long term, and similarly the government machinery doesn't waste its energy in producing high-frequency dashboards, rather than look at saying how do we build our ability to grow, and what investments do we need for enhancing our ability to